Hey everyone, LoRosha here. If you were watching the Korean market yesterday, it felt like a party, right? The KSPI was just soaring, everybody was happy, waiting for Nvidia's earnings. But, well, while Seoul was sleeping, it seems the US market decided to flip the entire table. And talk about a reversal. I mean, look at this. We saw the KOSPI close up almost 2%, just full of optimism. And then, a few hours later, the tech-heavy NASDAQ just dives, dropping over 2%. It's a classic case of financial whiplash, and it's left investors everywhere asking one simple question. Okay, so let's get into it. How on earth does a fantastic earnings report trigger a massive sell-off like this? It's a story that unfolds like a series of dominoes, and believe me, it all starts with the company right at the center of the AI universe. That's right, the very first domino to fall was Nvidia itself. They delivered an incredible performance. But in this kind of strange market we're in, that perfection, well, it actually became a problem. So just think about how this played out. Nvidia did exactly what everyone hoped they'd do. They absolutely crushed their earnings, and right away, the stock shot up almost 5% in after-hours trading. But then, gravity kicked in. The stock completely reversed and ended up closing down over 3%, and it dragged the entire semiconductor sector right down with it. So what's the deal? This is a textbook example of something we call sell the news. Basically, all the good news, all that excitement, was already baked into the stock's super high price. The smart money had already made their bets, and they just used the official good news as the perfect excuse to cash out and take their profits. This analogy just nails it. Everyone expected Nvidia to perform a spectacular high jump, and they did. But the thing is, the market had priced them as if they were literally going to jump into orbit. So when the result was just excellent instead of flat out impossible, investors decided it was time to take their chips off the table. But that wasn't the only thing spooking the market. So let's move on to that second domino, and you'll see how this all starts to connect. At the exact same time investors were getting nervous about tech stocks being too expensive, the US Federal Reserve decided to pour a little cold water on the whole party. The Fed released the minutes from its latest meeting, and the tone was what we call hawkish. All this really means is that they're still super worried about inflation. They're basically signaling, hey, don't expect us to cut interest rates anytime soon. They'd rather keep rates high to make sure inflation is really and truly dead, even if it slows down the economy. And here's the bottom line. Any hope the market had for one last interest rate cut in December was pretty much crushed. This is especially bad news for those high-growth tech stocks because they really depend on cheap borrowing to fuel their expansion. The idea of higher rates for longer? Oof. It sent a shiver through the entire NASDAQ. And to make things even worse, this was all happening on a day with really low trading volume. Way below the average. Think of it like shouting in an empty room. The sound just echoes so much louder. With fewer buyers around, all that selling pressure had a massive, outsized impact. And it just pushed prices down even further. So, after all that drama in the US overnight, what does it mean for investors here? Well, it means the Korean market is probably waking up to a pretty serious hangover this morning. Just yesterday, foreign and institutional investors poured over $1 billion, that's billion with a B, US dollars into the Korean market. And this wasn't just a random investment, it was a very, very specific bet. They were betting big on our semiconductor giants like Samsung Electronics and SK Hynix. The plan was simple. They were expecting them to ride the huge wave of Nvidia's good news. They thought they had a sure thing, and they went all in. Unfortunately for them, that bet has now gone sour. Since the US semiconductor sector fell apart overnight, we can pretty much expect to see a gap down in Seoul today. What that means is these stocks are probably going to open way, way lower than where they closed yesterday. The bill for all that optimism is coming due. You could see this conflict playing out so clearly in the US market. Money was just fleeing from those bleeding-edge tech and semiconductor stocks. But, it had to go somewhere. It flowed into what we call safe havens, defensive stocks like Google and Walmart. Companies that provide essential stuff and are seen as a lot more stable when things get rocky. Okay, so with all of this chaos, how should you even approach the market today? Let's talk strategy, because today is absolutely a day for defense. It is not a day to be a hero. I really want you to remember this phrase. News is a fact, price is a reaction. The news, the fact, is that Nvidia had a fantastic quarter. That's true. But the price, the reaction, was negative. This is such a powerful lesson that in the short term, market psychology and expectations can be way more powerful than the facts themselves. So here's my advice for today. First, do not chase the waterfall. If you see chip stocks dropping, don't panic sell, but please don't rush in to buy the dip right away either. Just let the dust settle. Second, think about where the safe havens might be. Here in Korea, banking stocks could offer some shelter from this tech storm. And third, and this is the most important one, put your risk management first. Protect your capital. And that really leaves us with the big question, and I'd love to hear what you think. Is this the start of a bigger correction for the whole AI sector? A sign that things just got way too overheated? Or is this just a temporary dip? Maybe the buying opportunity of a lifetime? Let me know your thoughts. I'll see you tomorrow.